This show is brought to you by NMDC Group.
Moody's reviews downgrading Israel's credit rating, and global stocks fall after the Fed keeps its rate hike threat alive. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Moody's has put the Israeli government's AI credit ratings on review for downgrade, citing the unexpected and violent conflict between Israel and Hamas. Moody's says the severity of the conflict raises the possibility of longer-lasting and material credit impact. It's putting several of the Israeli government's credit ratings on review for a downgrade, including its long-term foreign currency and local currency ratings. Moody's statement comes after Fitch announced this week it's placing Israel's A+ foreign and local currency issuer default ratings on Ratings Watch Negative. Aviation war insurers have reportedly terminated coverage for some airlines based in Israel and Lebanon. Aviation war insurers from Europe and the U.S. can cancel or change the terms of their policies with 7 days' notice if they believe that a major conflict poses too great of a long-term risk. Analysts say war underwriters' appetite for continuing to cover these risks for no additional reward differs, and some are now looking to withdraw coverage. Carriers have reportedly now received these notices. Asian markets were broadly in negative territory this morning after U.S. stock markets fell overnight. Markets are under pressure after Federal Reserve Chair Jerome Powell warned inflation is still too high despite a recent slowdown. It leaves the door open for another interest rate hike if needed. The Dow lost 0.8%, the S&P 500 slipped 0.9%, and the Nasdaq slumped 1%. Investors are also concerned that the Israel-Hamas war could spiral into a broader Middle East conflict. And that brings us to today's Forbes RealTime Billionaires ranking, which tracks the daily wins and losses of the world's wealthiest people. These losses are evident today. Tesla's stock has been falling since it disappointed with Q3 results, and our biggest loser today is Elon Musk. He's down $24.8 billion overnight and now has net wealth of $231 billion. Our second biggest loser today is Michael Dell. He's down $2.6 billion with net wealth of $67.5 billion. And our third place loser is Blackstone's Stephen Schwarzman, down $1.9 billion and now with $30.2 billion. Check out our website and our social media for all of the latest Billionaires news. Shares in Japan's Daiichi Sankyo soared more than 14% today after the pharma group announced a major cancer drug deal with U.S. giant Merck worth up to $22 billion. Merck will pay Daiichi for the rights to 3 drugs in development. They're known as antibody-drug conjugates. They attack cancer cells without damaging surrounding healthy ones. The companies will jointly develop and potentially commercialize the 3 drugs worldwide. Global carmaker Stellantis has sold 3 factories it held jointly with Dongfeng Motors to the Chinese manufacturer as it continues its withdrawal from the country. Stellantis says Dongfeng will buy these factories to manufacture Peugeot and Citroën models in addition to their own models. They'll also manage Peugeot and Citroën sales in China. The value of the transaction is estimated at $234 million. Stellantis has had trouble penetrating the Chinese market with a JV with Guangzhou Automobile Group filing for bankruptcy just last year. The share of Russian oil in India's overall imports rose to about 2/5 in the first half of fiscal 2023-2024. Industry data shows Moscow is now India's top supplier as refiners curb purchases from the Middle East. India is the world's 3rd largest oil importer and consumer. It's now the top buyer of the discounted Russian seaborne oil. India imported 1.76 million barrels per day of Russian oil in the year's first half, more than doubling its imports year on year. And another crypto lawsuit. New York's Attorney General has filed a lawsuit accusing crypto firms Gemini and Genesis of fraud that cost investors more than $1 billion. The suit alleges twin brothers Tyler and Cameron Winklevoss, known for their earlier roles at Facebook, misled investors about the risk of putting money into a program that involved loans that at one point were concentrated in Sam Bankman-Fried's Alameda research trading firm. The suit alleges investors were fed blatant lies that their money would be safe and would grow. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.
This show is brought to you by NMDC Group.